Hello everyone, it's Connor FX here today. Welcome to the new YouTube video. So today we're gonna talk about the SCN session liquidity. So the main point of this video are the first point. We're gonna talk about the origin of the idea of the SCN session and why smart money traders look to the high and the low of SCN session as a point of liquidity. The second point, we're gonna talk about how smart money traders try to trade this idea, and the third point, we're gonna talk about confluences and tips to increase the win rate of this strategy. The last point we're gonna talk about, so we're gonna give some examples and case studies. So let's go straight to the point. Let's go. So the origin of the idea of SCN session liquidity and why smart money traders consider the high and low as a point of liquidity. So the origin of this idea is come from an indicator or from a strategy. Retail traders use this strategy. I was one of the retail traders in the past years, and I used this strategy. So they have an indicator called three-tier London breakout. Let me show you. I have the picture. Yeah. So this is a picture from the indicator. They use it in the MT4 and MT5. So the three-tier London breakout. So what is the idea behind that indicator? So they consider the high, the high and the low of SCN session as a support and resistance level. So like you know, retail traders, there is who try to sell from a resistance, and there is who try to buy from a support, and there is other retail traders look for a breakout. So there is other try to sell from here and target some levels here. The indicator give those levels, and others try to buy from here to some levels here, and there is other traders try to wait till this level break and retest and buy again here. The same idea here, wait for break and retest and sell from this point. So what's gonna happen here when we have a SCN session range? So smart money will do the same idea of support and resistance liquidity sweep. So this is gonna happen. Let me show you. You're gonna see like this: a break, come to this level, some retail traders start selling, give them some hope, and then take them out. The same idea with this level. So this is the origin of this idea and why these levels considered as a point of liquidity, because retail traders try to buy and sell from these levels here and here. So how the smart money traders try to trade the SCN session when London open? So the idea how smart money traders look to trade is, sorry for that, so is we're gonna wait till the high of SCN session of the low got breaked, and then try to drop and then drop to the lower time frame and look for a change of character. So we're gonna wait till this, for example, this high break, and look for a form like that, change of character here, look for a valid supply here, and then try to sell from and targeting the low of SCN session. The same thing here, we're gonna wait till this low taken out, give us a change of character, look for a valid demand, and targeting the other high of the SCN session. So this is the general idea of smart money traders who want to trade the SCN session. Influences and the tips to increase the win rate when you use this strategy. So we're going to talk confluences and what you need to avoid. So the first point you need to have a valid point of interest below or above the ascent session based on the trend direction. Let's give an example. For example, we are in an uptrend, higher high, lower high, higher high. So, and here we have the ascent session. For example, so let me explain that. We have here a break of structure, and we have, after that break, we have a valid demand created here, and above this demand we have an ascent session formed. So this will add a more confidence or confluence to our entry here after this taken, this liquidity here below taken out. We have liquidity here, taken out this liquidity, tap into a demand that caused a break of structure, and then look for a lower time frame here, confirmation like that, change of character, and enter from a lower time frame demand here and targeting as a first TP the high of ascent session and the second TP the last high. So this is, and by example, the same thing with the sell example. So then the second point we consider as a confluences, we need another form of liquidity below or above the ascent session. For example, we have here the ascent range. Let's say this is our ascent range. Okay, so we have here the ascent range. So for example, below it or above it we have other form of liquidity. Let's say for example we have for example like this. Sorry for the bad drawing. So okay, so this is our second form of liquidity. We have here a double top. Let's say we are in downtrend. Okay, this is the ascent range. We have a liquidity here above our ascent range, but we have other form of liquidity above it. So there is people who try to sell from this, for example this supply, but it's not a valid supply because we have other form of liquidity above it. So we're gonna wait till the two form of liquidity taken out, the ascent session and the double top, or the other form, support and resistance, head and shoulders, any other form of liquidity, and then look to sell from this level of supply and targeting as a first TP the ascent low and the second TP as the last low here. So what we need to avoid, you need to don't try to trade that strategy in the opposite direction of the trend. For example, we are in an uptrend, we have the ascent session range, for example, so, and we have as a first thing taken out the high, and you try to sell from this point here, this is, and try to target the ascent low. So maybe that will happen, and sometimes it happens, but in the most cases will take you out after tapping into a demand in the range, in the ascent range here, and take you out. Don't try to trade this strategy in the opposite direction of the trend. The second point, don't try to trade this idea if you don't have a clear demand or supply above or below your ascent range. The same for first point, it's the opposite. So if you don't have a clear demand or supply below or above your ascent range, of course based on the direction of the trend, don't try to trade it. So this is very risky. So now we're gonna go to show you some examples. So let me show you that example first before we go to the other examples. So we have here GBP USD. We have a higher time frame demand, ASEAN range, price take the ASEAN low and tapped into this higher time frame demand. So we dropped the lower time frame. What we have here? So I have this break of structure here with imbalance and other structure break here. Price give us a double bottom as more confluences, and I take the entry from this point, and price show a nice reaction to the upside. So my next point of interest maybe will be this one here. Okay, so and other trade I take here is Euro GBP. So we have ASEAN session taken out here high. We have a sharp drop. This is our change of character. Price come back to our point of interest. I take the sell from this point. The market is live now. I will show you the proof of entries. Thanks.